Getting a move on, let's also focus in on the metal space, and Indian steel prices have been dipping at a 2-month low. Let's find out a little bit more as to what's attributing this and assess the demand-supply dynamics with RK Goyal, the Managing Director at Kalyani Steel. Thank you so much for taking time out. Mr. Goyal, are you seeing a cooling off of steel prices back home, and what do you believe is the trigger behind this fall?
Good morning. We are in the engineering steel long product space, and as far as our products are concerned, till now there is not much of price increase. Like we could get a price increase of in total around 17,000 rupees per ton, as against more than double in the commodity steels, whether it is HR coil or some other products. So as far as we are concerned, our customers are very happy. In fact, we have to come out with requesting them to consider another price increase. And as far as the demand part is concerned, but for April and May, because of very heavy lockdowns and all, vehicle sales had dipped. But now we are seeing June numbers were pretty good, and we expect a further increase now. And there is an increasing trend in export of automobile components. So we are seeing good demand. We will have a price increase again, and we are seeing going to see a very good period.
Okay, good to know that you're optimistic there. You cater to autos as well in a big way. So what kind of demand are you seeing?
No, we are fully loaded. We are seeing a very good demand. That's what I said, from Indian auto manufacturers, as well as there are a fairly large number of auto component exporters. They are also fully loaded, and we are seeing a very good demand from them. In fact, we are not able to service the orders.
Okay, so that's the outlook coming in on demand, of course. Mr. Goyal, if we could just take a look at a couple of other parameters as well, that we wanted to discuss with you. When it comes to exports, we understand that realizations there have also fallen a bit. How much of your sales are dependent on exports?
Actually, we export directly very little. There we are finding that the prices are increasing because globally, in Europe and USA, prices have gone up substantially. Even in China, prices have gone up much more as compared to India. As far as indirect exports are concerned, where we supply steel and the component manufacturers, they manufacture auto components and then export, there the demand is again very good. And I don't see any price pressure because internationally, the price for engineering steel, alloy steels have gone up. And they are much larger than what increase we have got as on date.
And input costs, we understand coking coal prices, of course, have gone up quite a bit. So do you see that as a threat to margins?
Yeah, what you say is right. Coking coal prices have gone up. Coke prices have gone up. Iron ore prices have gone up, as well as this. There is a substantial increase in ferroalloy prices. But I'm sure we will get it reimbursed indirectly from our customers by another price hike, and which our customers will be happy to pay to us.
Mr. Goyal, you said something very interesting just a short while back, that there is so much demand from the auto sector that you are unable to cater to that. So what happens in such a case? A, do you increase your capacity? Do you have plans for the same?
No, we are already operating at 100% capacity utilization in both our plants. So yes, we are definitely thinking of expanding our capacity, and in the process of working on a plan, how we need to set up a brownfield or a greenfield project. So we are working on it.
Sure. Also, since you've talked about, this uptick in demand from autos, Could you compartmentalize that? Where within the auto sector are you seeing demand coming in? Is it from pure play auto companies? Is it from ancillary companies? And within pure play auto as well, is it the passenger vehicle segment, LCVs? Since you've got your ears close to the ground, where within autos are you seeing the maximum surge in demand coming in?
Yeah, it's a very interesting question. As far as passenger vehicles are concerned, four-wheelers, cars, and SUVs are concerned, I expect demand to be more than around 8%, more closer to 8% or maybe more in the current financial year. As far as two-wheelers are concerned, it depends partly on the monsoon, but still it will be at least 6%. As far as tractors are concerned, they are doing pretty good. As far as commercial vehicles are concerned, in fact, that's a concern for the industry. And there we are not seeing great growth, and it is yet to be watched. But the way government is spending money on the infrastructure, I'm sure after a few months we will see an increased demand.
Okay, and given that China as well has imposed output curbs while also releasing the state reserves of steel to ensure adequate supply, what kind of an impact do you see in the long term this having on steel prices?
You are right. As far as China is concerned, what you said is correct. Even Russia, they have imposed export duty and all. In fact, with this, the material available international market will be lower, and as far as India is concerned, it is going to be positive.
All right, appreciate your time. Thank you so much, Mr. Goyal, for joining in and giving us a view on the outlook for steel prices, the demand scenario, and how the company as well is coping with input costs.